What's up, guys? It's July 30th, 2025. Hope you're doing good today. It was FOMC, and we had an expanding triangle. Expanding triangles are ankle breakers for sure. NASDAQ was a little more lenient because this wasn't a new low. It was a leg one, pullback leg two. That was one trade I took. And then I took this trade in the morning on NASDAQ. Just pull it up. Yeah, so I took here's a leg. So leg one, pullback, leg two. Then I took this leg one, pullback, leg two. And with this leg, I entered right on the 50% mark from here to here. I exited, I think, on 21, and then I bought again down here. But my risk was a little bit tighter, but I still would have been in the same trade. I'm working on a re-entry package because it's pretty important. I went back and rewatched the re-entry package for Systems Academy, and having a re-entry package on winning trades definitely makes a difference. So something to think about if you guys are still building out your systems or trying to trade systematically. That's a component, that's a bridge you're going to have to cross eventually. I want to give a quick shout out to all the members and subscribers. I appreciate you guys tuning in. And yeah, hitting that subscribe button and joining the membership. If you're going to join the membership, I do trade breakdowns, entries, exits, and I base them around trap traders. Kind of like exactly, I'm trying to just really learn how more traders are getting trapped, because each part of the market cycle, there's just different trader getting trapped. This is a reversal up here, but that's a form of a breakout. So breakout, channel, trading range. In channels, traders are getting trapped on pullbacks because they think that the market's reversing. In trading ranges, traders are getting trapped at extremes because they think it's breaking out. And if you're gonna, let's see, where's a good breakout? Maybe this is a breakout. Traders may think we're in a trading range and they keep averaging in, thinking it's gonna come around, and then they get trapped, forced to buy back shorts in this situation. So really learning how to spot the nuances of traps, and then placing my order where trap traders get out at break even is how I'm going to be capturing leg twos. Weekly chart, daily chart. Today's going to be a little bit faster one because for some reason my computer keeps saying the video's corrupt. This is the third time I'm filming this today, but that's okay. It's good practice. So we're on the weekly chart. We have a rally here. We have multiple legs up. Leg one, pull back, leg two, pull back, leg three. You can do from the EMA, leg one, pull back, leg two, pull back, leg three. What I think is important to note is how, look at the start of the breakout. The bars were bigger and they're progressively shrinking. Usually we see a big climax bar. I'm not saying we're going to see a climax bar this time, or I'm looking to trade that. But just in general, we see some either price action slowing down or climax bars and a big climax gap. Today was an interesting day because up until right at the last moment, it was looking like a bear bar at highs, and then bulls rallied when we came close to the EMA, and now there's a tail. So we'll see what happens in the next 2 days, if bulls can make this a bull bar, or is it just was this a vacuum and we're going to sell off tomorrow? Daily chart. This is the first time we've had three bear bars in a row, so that's interesting. We can check right now if it looks like it's going to get a second leg. Here it is. So bulls are already past the second leg. If you're looking for a second leg down, 50% entry, it's past and you're kind of underwater. If bulls are making money here, that could be a problem, because if you're a bear, you want to see a leg one, quick fill, and exit. So that way bulls are getting out break even quickly. If they're not getting out break even, there's no sense of urgency, and this just might be a pullback. Leg one, pullback, leg two. Sorry, I just got filled and I think I need to exit this trade. I had it sitting up for too long. So I was looking for a big, just a leg one, pullback, leg two. But depending on this close, I might just exit because this is a bear channel down. Bears might have momentum. So we'll see how this candle closes. Usually I don't let my order sit this long, but with the gap up, I was thinking maybe the EMA would be support. This breakout and then touching the EMA might be acceptable. So I left my order here, but sometimes I'll pull it if it takes a while to get filled. So that's exactly how I trade. Man, I'm trying to think what I said in this video and what I said in the last video, because I don't want to repeat myself. Be a quick one. So I get this expanding triangle. NASDAQ was hope I said it. I think I said it in this one where I was like NASDAQ was more meaningful or showed some leniency with the expanding triangle today. So I really can't remember if I said it in this video or the other video. Anyways, we have a gap up. It sells off the EMA. Bar 1 has bears trapped at the EMA because it rallied. So they're going to want to short more to get out at break even. And they do on bar 4. Well, they can start shorting here on bar 2 as well because they short the high and they get out quickly here, break even, and there's a leg 2. So because we don't see this rally yet. So leg 1, pull back leg 2, bears get out here, bulls buy back short, or excuse me, bears buy back short at the 50% level. Bulls buy that, knowing they're going to get a second leg, and they get that second leg real quick right here. Now trading range highs below the higher time frame EMA. Bears want to sell, and they want to see this right away. Instead, they get trapped with the EMA again. Let's see. So there's a tail on bar 4, so we know that bulls are buying at the high here, hoping for a breakout. They buy more at the EMA, and then look at bar 6. It's followed up by a bear bar. So some bulls were nervous because, well, not really. It did. Well, some bulls did sell out at the 50% because they were trapped. They bought up here, sold out. But then the rally happened. So it wasn't too much conviction by the bears to short, but they did get a second leg down. Leg 1, pull back leg 2. This is a second leg because it's a move in the direction. But it's not a second leg I would count because I like to say it passive. It's one tick below the prior extreme. Again, I didn't come up with that. It's either Ali or Al Brooks who came up with that. I can't remember where I heard it from, but that's how I do it because that's how they do it. 8, 9, 10, 11. Nice rally. Has bears trapped here. Bears trapped on the low of 7. Now the problem is today ends up being expanding triangle. So the bears that shorted down here are going to short more up here, and they actually make money, and they can get a second leg down. Leg 1, pull back leg 2. Same situation with the second leg, doesn't go one tick. But now the bulls are trapped up here, so they're going to buy more before their stop could be down here possibly. If their stop is down here, they think this is bullish price action. It's a higher low. It's testing the breakout point right around here in this rally, and then they get us, and then we get that second leg. That's the second leg I was in on NASDAQ. Leg 1, pull back leg 2, second leg trap. It's a double bottom. Bears that shorted down here are going to short higher and get out right here at the original entry. So they're going to buy back shorts, and that's how double tops are formed. So that's how double bottoms formed. That's how it becomes support. That causes a rally. 26, 27, 28, 29, 30. Shot off to get a second leg. You can buy the close of 31, and then you go for a 1 to 2R. Put a 1R stop maybe right down here, and you can see that was met with 32 to 35. Then it goes sideways for a long time, but this price action does get a second leg. Leg 1, pullback leg 2, prolonged pullback leg 3. Bullet in the box analogy, you shoot a bullet in the box, it's going to bounce around for some time, and if it's under 20 bars, it's going to get spit out the same way. And that's what we can see right here. It gets spit out the same way. 3 really nice looking bull bars with a gap here. It becomes climactic, and then we go sideways. Bar 55 sells off and rallies, but closes right around the EMA, so it's trading range bar. Trading range here, and the lows here. High and low. Bears that short here are going to short more. They buy back shorts. Bulls that are trapped here are going to buy more. They buy back. Excuse me. Did I say that right? Short. Buy back shorts. Buy here. Buy here. Yeah. So, but in this case, the bulls that were trapped here, they actually made money because they went past the original entry. And then they hit out 62 being a big bear bar, breaking through the support here and here. A reversal is a form of a breakout. So 62. Breaking out from this, so it's a reversal, it's breaking out. 63 is the first pullback, and then we get 64, 65, 66, 67. Nice bear bars, all closing on their low, creating gaps. So leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. That's a wedge bottom. Trading range behavior. Market cycle is going to break out here, and it resets. Here's the breakout. Then the overnight session. So we have the breakout. Overnight session pulls back, so we're channeling higher, and now the market cycle says we're in a trading range. I was hoping the trading range was the EMA, but it's looking like maybe the low here, or 50% might be support. So we'll see how it goes. Alright guys, let me know how you guys did. Let me know if you made money, if you got stopped out. Expanding triangles, they're tough. If you learned something, share the show, don't be a hoe. I'll talk to you guys later. Thank you for your time. Bye.